Hey, this is Arjun, CEO of Doola, and in today's video, I'm going to give you a Taxes 101 session on what deductions you can claim without receipts. Let's dive in, and I'm going to answer everything you need to know about deductions, receipts, and what you can claim. Running a small business can be filled with tons of opportunity and potential. It's what keeps entrepreneurs working so hard day in, day out to achieve their goals. One area of struggle for almost every small business I've worked with is the issue of taxes, laws, rules, and regulations. Despite the difficulty, business owners need to make sure they are 100% compliant to not only avoid issues down the road, but to make sure they are paying the lowest taxes legally allowed. Who wouldn't want to pay lower taxes if they can? An essential part of paying lower taxes is getting the most deductions allowed. In this video, I'm going to explain how tax deductions work and which deductions you can claim on your income tax forms without receipts. What is the standard deduction? Let's start here. The standard deduction is a fixed amount of income that is not taxed. Individuals or married couples can claim this standard deduction each year, and that amount of income is removed from their taxable income. For example, individuals last year could deduct $12.95K from their taxable income as the standard deduction. That's $12,950. This means their taxable income was reduced by $12,950. Married couples who filed jointly could deduct $24,900 or $24.9K. A head of household with dependents but filing individually could claim $19,400 or $19.4K. Using the standard deduction also means you cannot then itemize deductions. You have to either choose the standard deduction amounts or you can choose the itemized deductions. You cannot claim both. It's also very important to note that the standard deduction amounts change yearly to match inflation rates. So you have to make sure you understand the deduction changes when you're filing your current tax return. 10 deductions you can claim without receipts. When people think of itemized deductions, they often imagine shoeboxes full of receipts and invoices. That's not the truth though. However, there are many deductions you can make which do not require receipts. Home office expenses. This is usually the most common expense deducted without receipts. If you use your home as an office, you can then deduct a portion of the rent, utilities, and property taxes as a business expense. There are a few requirements to meet to use this deduction. The main one is that the room you claim as an office can't be used for anything else. So it doesn't have to be a dedicated office per se, but it can't be a room primarily used for something else. Things like office furniture or office repairs can often be fully deducted using the item's full purchase price. However, for these items, you will want to have receipts available. Cell phone expenses. Since almost every home business owner will use a cell phone for business purposes, these costs can be partially deducted without a receipt. The business owner should calculate how much of their cell phone use is for business. Typically, 30 to 50% usage can be claimed as a business expense. You can then deduct this amount for tax purposes. Vehicle expenses. If you use a vehicle for business purposes, you can deduct the cost of gas, repairs, and even depreciation. You can keep receipts for all of these, but there is an easier way. By using the standard mileage rate, you can simply calculate the miles driven for business purposes and multiply that by the standard mileage rate. There are two different standard mileage rates per year, January to June and July to December. So make sure to use both to get an accurate deduction, as well as the highest deduction possible. Travel or business trips. You are allowed to fully deduct travel expenses, but there are a few rules. The travel must be necessary and away from what the IRS or Internal Revenue Service considers your tax home. For most people, this means where they live. Business travel must also be reasonable. This means extravagant travel arrangements or bringing family members is not deductible. Although these deductions don't technically require receipts, you should still have copies of credit card statements and airfare if you need to prove these expenses. Self-employment taxes. Workers who are self-employed are required to pay Medicare and Social Security taxes, which are commonly referred to as the self-employment tax. You can deduct half of these taxes from your total income, and there is no receipt required, as the IRS will already know if you have paid these or not. Self-employment retirement plan contributions. Certain contributions to retirement plans, such as a 401k, allow you to deduct those from your income to lower your tax burden for the year. No receipts are needed here, as your contribution should already be recorded through the retirement plan. There are limits on these contributions though, and how much can be deducted. These limits vary based on the age and the type of the plan. Self-employed health insurance premiums. If you are self-employed and pay for your health insurance, you can deduct these premiums. You don't need receipts for this, and instead, just a copy of the policy is enough. You can also take this deduction even if you choose not to take itemized deductions. Educator expenses. Educators are allowed to deduct up to $300 for out-of-pocket expenses related to their teaching or classroom activities. This amount changes to adjust for inflation, so make sure to find the current amount if you use this deduction every single year to make sure you have the latest number. This is allowed for any teacher, counselor, instructor, aide, or principal for grades kindergarten through 12th grade. Student loan interest. Student loan interest can be deducted without receipts, and you can do so even if you don't itemize your deductions. This means it is entered as an adjustment to your income. You are allowed up to $2,500 in interest to be deducted from your income each year. There are a few caveats for this deduction. For example, nobody can claim you as your dependent, and your adjusted gross income has to be less than $175,000 annually if filing jointly. Qualified employment plans that offer student loans are generally not eligible for this deduction, as well as private loans from related family members. Certain charitable contributions. Those businesses registered as a corporation can deduct charitable contributions on their corporate income tax form. Other entities would deduct these expenses on personal income tax forms. You can also deduct non-cash donations, which are referred to as in-kind donations. However, these do require separate paperwork, including an IRS Form 8283. Some items over $5,000 may require a written statement as well, or an appraisal of value. Other tax return documentation to use if you have no receipts. Below is a list of other expenses you can deduct. Many do not require receipts, but still have a record of these expenses, either in the form of bank statements or other documents. Most deductions have limits, so consult with a tax professional if you're unsure about how to go about making these deductions. Advertising/marketing, bank fees, business insurance, computers and related equipment, professional dues and memberships, rental equipment used for businesses, certain event costs, some startup costs, professional licenses or permits, merchant fees, repairs, salaries, some shipping expenses, website costs. That's a quick rundown of some of those. How the IRS rules on tax write-offs varies based on business entity type. There are differences in write-offs or deductions among the different business entities. For example, an S corporation cannot claim the home office deduction. The S corp can pay your partial rent though, but then that rent would be personal income and then be taxed. Another aspect is health insurance deductions. Corporations can claim these on their corporate tax returns. In a limited liability company or LLC, the owners would typically deduct these on their Form 1040. An LLC is rather straightforward, as most deductions are just made by the owners or members on their personal income tax forms. This is because an LLC is regarded as a pass-through entity, as the revenue passes through to the members or owners. Corporations can be a bit more difficult and have more complex requirements when it comes to claiming deductions. Maximizing your tax deductions. Taxes are a critical part of managing a business of any kind. Registering as the right entity can give you a tax advantage that saves you some serious money. Let the experts at Doola help you choose the right business entity for your situation. Doola offers numerous small business tools and resources, from opening a business bank account to bookkeeping services that will help you make tax season a breeze. Contact us today to get started and let us know if you have any questions about tax deductions without receipts, setting up your entity, business banking, and more. Last but not least, I'm going to run through some of the most frequently asked questions we get when it comes to tax deductions without receipts. Did you know that you can submit a tax deduction to the IRS without having a receipt? These are the most frequently asked questions we get on this topic. What things count as deductions? Most expenses that are crucial to running your business can be deducted. This includes things like business equipment, home office furniture, utilities, and more. What happens if you don't have receipts for expenses? Many deductions are allowed without receipts, but if you don't have receipts, other proofs such as bank statements, policy documents for insurance, or lease forms can be used as proof. How much deductions can I claim without receipts? There is a standard deduction amount of $12,950 for individuals or $24.9K for those filing jointly. The standard deduction is for those who do not itemize individual deductions on their tax form. If you itemize your deductions instead of using the standard deduction, then each deduction generally has its limits. That's a wrap. Thank you so much for watching this video, and I hope now you feel like you're an expert when it comes to knowing what deductions you can claim and file without receipts. And again, if you have any questions on business banking, formation, taxes, accounting, bookkeeping, or compliance for your business, do not hesitate to reach out to Doola today. Thanks so much for watching, and check out more of our content for tips, tricks, and insights just like this.